Nakache here with Daily Profit Cycle. People are stupid and the world is crazy, and you can use both to your advantage to get ahead, to profit, and to harness things that are going on in the world that people don't understand to help inflate or increase your bottom line as it relates to investing in stocks in the market. So I was reading this morning that A&W, the fast food chain, had to rebrand their 1/3 pound burger because it could never compete with or beat McDonald's 1/4 pound burger because in focus groups repeatedly, people thought that a 1/4 pound, 1/4, was bigger than 1/3 because four is bigger than three. And so they didn't understand that the A&W 1/3 pound burger was actually bigger and then therefore a better value than McDonald's smaller 1/4 pound burger. And so A&W is rebranding their 1/3 pound burger to the 3/9 pound burger because uh, obviously nine is bigger than four. So there's a lot of things people don't understand, right? People didn't understand that stocks were going to go back to all-time highs when stocks were going down in September and had their worst month since the pandemic hit in March of 2020. I was telling you that's exactly what was going to happen, that stocks would go back to a record in October. Stocks, the S&P, back to record highs in Q4, driven by earnings growth. And people were saying that certainly the mainstream financial media was saying that earnings weren't going to be good and that we were approaching a stagflation environment. Lo and behold, earnings are coming out. Earnings growth, if they keep the pace as they are right now, it will be the third best earnings growth on record. And we continue to see things inflating across the board. Commodity prices at record highs, copper prices at record highs, and growth absolutely ripping in tech stocks as household wealth in the U.S. Inflated to like $142 trillion dollars at last check. And those dollars are wanting to buy goods and services, and that is driving up prices. Of course, there's shortages, but other things are going on as well. For example, their UN is meeting this week in Europe to set climate goals. COP26. They're talking about decarbonizing the atmosphere, mobilizing $88 trillion in assets to increase sustainability and reduce the emissions associated with everything: transportation, electricity generation. And to do that, they're going to want to improve infrastructure, deploy renewables and nuclear, and that's driving up all the inputs for that. As we've been saying here, and as we've been profiting from, copper, tin, nickel, lithium, rare earths across the board. And of course, the other thing that's happened with that is cryptocurrencies have inflated, right? They've sort of, at least for the past year, taken the place as gold as the main inflation hedge. And that's something I wanted to touch on this week because you had a run recently to like, I don't know, 65 or $68,000 Bitcoin. And that's sort of pulled back a bit now to below $60,000. Certainly another buying opportunity, sort of like one that emerged when China said they were going to ban Bitcoin a month or 6 weeks ago. And the other thing you have is sort of wonky math, right? We know we've printed trillions of dollars. We know the Fed continues to buy billions of dollars of, securities, equities, bonds. And the valuations of things are sort of getting nonsensical. And here's just one example. Like Tesla went to $1 trillion market cap. There's only a couple $1 trillion market cap companies, like the biggest ones you can think of. Microsoft, for example, Saudi Aramco. Tesla went to a $1 trillion market cap this week because it announced that it's selling 100,000 electric vehicles to Hertz. Hertz is the company that was, almost bankrupt last year. So it was a $4 billion deal that was announced, and that added over 100 billion in market cap to those two companies. So it's sort of nonsensical valuations going on. You've obviously heard of, record baseball card sales, record art sales, NFT sales, etc. And so that's the double whammy that's inflating asset prices. The money printing coupled with people wanting to hedge against inflation and putting things into commodities and alternative assets coupled with real fundamental driver for those commodity inputs that are needed for infrastructure and green energy revolutions. So spot on my call last month that stocks would go back to highs. The things that are working continue to work. Energy continues to inflate. You've got oil now at $80. Housing continues to inflate with a REITs doing well. And I've got specific recommendations out this month in my premium research, the October issue of Foundational Profits, specifically a small cap recommendation to take advantage of this growth that's absolutely, frankly, ripping. Look, the U.S. economy is going to grow at 6% this year. That's twice what it was growing pre-pandemic, and that growth is propelling new stock highs, and that's not going to slow down, I don't think, here for at least a couple of months. So you've got people out there making crash calls. You've got people out there saying Bitcoin is too high. Those people aren't making money, or they're not beating the market, certainly. So get in there, buy the things that are working, and check out the premium research I put out this week that instructs you how to do that with guidance and all the things I mentioned in this video. Nick Hodge signing off for now.